Welcome to Wealth Kingdom channel. In my videos, I will explain about the basic financial terms in simple language. Infrastructure is the backbone of an economy. A country with very good infrastructure will grow fast. Infrastructure investment trusts help retail investors to participate in infrastructure investments. In this video, I will explain about infrastructure investment trusts. First, I will explain the features of infrastructure investment trusts. Infrastructure investment trusts are investment instruments that work similar to mutual funds. These are regulated by Securities and Exchange Board of India. Infrastructure investment trusts are listed on stock exchanges. The money collected from the investors is invested in income generating infrastructure assets such as highways, pipelines, warehouses, and power plants. The income generated by the infrastructure investment is distributed among investors as dividend. Next comes the types of infrastructure investment trusts. There are two types of infrastructure investment trusts. First one is investment in income generating finished projects. Investments for this type is offered through public issue. Next one is investment in projects under constructions. In this type, investments can be made through special purpose vehicle and its units are offered through private placements. Now, let us look into the structure of infrastructure investment trust. Infrastructure investment trusts are established as irrevocable trusts. Infrastructure investment trusts are registered with the Securities and Exchange Board of India. Infrastructure investment trusts are established with four major participants. First one is trustee. The trustee of an infrastructure investment trust is required to be registered with SEBI as debenture trustee. The trustee is also required to invest at least 80% of the investments into infrastructure assets that generate steady revenue. Next comes the sponsor. The sponsor of infrastructure investment trust is typically a body corporate with a net worth of at least rupees 100 crores. The sponsor must hold at least 15% of the total investments in infrastructure investment trust with a minimum lock-in period of 3 years. In the case of public-private partnership projects, sponsors serve as a special purpose vehicle. Next participant is investment manager. It also a body corporate which supervises all the operational activities related to infrastructure investment trust. The last participant is project manager. This authority is responsible for executing the projects. Now, I will explain the advantages of infrastructure investment trusts. First advantage is diversification. As infrastructure investment trust invests in multiple infrastructure assets, it offers investors an opportunity to diversify their investment in multiple infrastructure projects. This helps to reduce the risk and also helps the investors to generate steady returns in the long run. Next advantage is liquidity. It is easy to enter into and exit from infrastructure investment trusts as they are listed on stock exchanges. Hence, the investments in infrastructure investment trusts are highly liquid. Next advantage is quality asset management. The assets of infrastructure investment trusts are professionally managed. This ensures effective management and allocation of resources. Infrastructure investment trusts help promoters also with couple of major advantages. First, it helps the promoters to reduce their loan burden to a large extent. Next, promoters can use the investments collected to reinvest in other projects. Even though investors can benefit in several ways by investing in infrastructure investment trusts, these investments have certain limitations as well. First limitation is regulatory risk. Even a slight change in the regulatory framework like taxation related to infrastructure sector will have a major impact on infrastructure investment trust. Next limitation is inflation risk. A high rate of inflation will have a significant impact on the performance of infrastructure investment trusts. For example, inflation will increase the infrastructure sector's operating cost. Next limitation is asset risk. Investments in infrastructure have a long waiting period. This results in delays in generating income. Such delays not only affect the cash flow but also impact the profit projections. Thanks for watching this video. Please post your specific questions related to infrastructure investment trust. I will try my level best to clarify your doubts.